The Taxpert Change of Accounting Date app will help you to work out the effective changing accounting date for a sole trader or partnership client. Change of accounting date rules can be quite complicated, and as the actor Rupert Grint discovered, if you get it wrong, it can prove to be very expensive. But equally, if you get it right, there is a chance that the client's tax cash flows can be significantly improved. Well, what the app does is let you input the current accounting date, current and forecast profit figures, overlap brought forward, and most important today, the various grants available as a result of the pandemic. So the local authority small business fund grant or the local authority retail hospitality and leisure fund grants, but also the HMRC self-employed income support scheme grants. And it's important to note that the recognition of these various grants differs depending on the various circumstances. The SEISS grants are, as a result of Finance Act 20, all to be recognised as part of profits for the tax year 2021, whereas the local authority grants, the Small Business Fund grant and the Retail Hospitality or Leisure Fund grant, will be recognised in accordance with generally accepted accounting practice. And for many, that will mean that the recognition date is 1st of April 2020. HMRC guidance makes clear that entitlement to these grants is the earlier of payment date or 1st April 20. And under FRS 102 and FRS 105, it doesn't matter whether you use the performance or the accruals method. In each case, those grants ordinarily would be recognised in the accounting period in which the entitlement date falls. However, there may be arguments for the date to differ, and that can have an effect on the calculations that we're going to look at. I should, of course, remind you that generally accepted accounting practice, as set out in FRS 102, etc., is a requirement for the tax calculation of sole traders and partnerships, even though their accounts do not themselves have to be drawn up under GAAP, but for tax purposes they do. Well, let's go now to examples, and I'll start by opening the screens on which I've prepared some of the figures, and we'll work through what the app does and how you can then use it to help your clients. In this first example, we can see all of the information at a glance. There is a huge amount of information on this screen. So let me just focus in on one or two areas. There are essentially three different areas of the screen. The top area is the input area, and you put in the current accounting date. And what I've done is give you a drop-down box so that you can choose the obvious the obvious month-end dates, or you can choose 5th April, either 5th April 19 or 5th April 20. Here I've pre-entered 31st December 19. I must, of course, pick up the overlap relief brought forward, a very important point, easy to overlook that, and that'll be from the client's file, maybe from a previous accountant. In some cases, there can be difficulty in getting the overlap relief brought forward, but for year ends other than 5th April or 31st of March, that's going to be a material figure. We then put in the profits and losses, either historical or forecast, and in this example, I can see that we were making profits of the order of 70 to 80,000 up to and including this year. And interestingly, this year has been pretty good. So this particular sole trader has not been adversely affected by COVID, although their profits are forecast for calendar 21 to be significantly lower. So maybe they're planning a sabbatical, I don't know. But we put in those figures. Any of the yellow cells, can be altered. So these are the input figures. But then, very importantly, we've got to put in the grants, and I've gone too far to the, let's do it a different way. If we put in the grants, here I've got the Small Business Fund or the Retail Hospitality or Leisure Grant funds, 10,000, and the date of recognition. Important to put in that date. It defaults in the app to 1st April, but I've put it in there as 10th of March, and that could have an effect on the change of accounting date that is proposed. So the SB and RHL grants go in up there, but here we put in the SEISS grants. In this particular case, there won't be any because the level of profit exceeds the 50,000 threshold. But those are treated differently because, as I've said, the small business grant that then populates that grey cell is based on the accounting date and the recognition date of the grant, whereas the SEISS grants all go into the tax year 2021. And then moving to the right, having entered the accounting dates and the profits, the app will then determine the basis periods for each tax year, which initially is quite straightforward, and will work out the taxable income. And we can see that for 2021, where we did have a significant profit in the year to December 20 of 90,000, that is increased by the 10,000 small business grant. And we've then got the estimated tax figures. Now, because it can be a material factor for quite a number of sole traders, I've put into the app a field for child benefit claims. And let's suppose that this client has got 3 children, then their child benefit entitlement would be of the order of, it's just a round figure, 2,500 a year. And that would trigger the high income child benefit charge in each of the years, except the one where the taxable income has dropped because of the sabbatical. And that can be important in other cases because a different accounting date may well give rise to different profit or taxable figures and hence reduce the high income child benefit charge. So those are the input figures, quite straightforward. And then if I move down to the second major part of the screen, we've got the new accounting date, and what I've done is program it so that automatically the software will determine the optimum new accounting date. And in this case, we can see that the optimum date is 31st of March 21. Now, the original date was 31st December 19, so you would have been filing the 1920 tax return, the return in the current filing season for the year to December 19. And what I'm suggesting in this case is that you still do that and don't change accounting date until we get to 31st of March 21. Now, that will be a 15-month accounting period. And when we do that, I've then recalculated the profits on the basis of those new accounting periods. We'd have year to December 19, and then the next one, 15 months to March 21. And these profits and losses here are simple time apportionments, but it is possible for you to amend those. If you don't like the time apportionment, I can enter a different figure. So I can put in that figure, 100,000, and that will change it all, but let's leave it as is. And down here, I've got a button that says reset profits. In fact, if I just put in 10,000 there and 12, 23, 9,100, it doesn't matter what figures I'm putting in, the reset figure will, or button, are you sure you want to reset the profits? Yes. They then go back to the calculated ones on the basis of time apportionment. You can also, if you want to look at the effect of a different date, and here in particular, you might say to yourself, well, if I were to change not to March 21, but to 31st of March 20, what effect does that have? And just before I do that, I can see at the bottom of the screen down here, under the heading 3 years, I've got a minus 2239. Now, what that's telling me at a glance is that for the 3 tax years that are most important, I think, at the moment, that's 1920, 2021 and 21-22, so this year, last year and next year. If I do change accounting date to March 21, it'll save the taxpayer 2239. But if I were to change to March 20, then I see that that figure is still 2239. That's because that's not the one I want to look at. That will always be the optimal one. What I need to do is look at the main comparison screen. Now, this is a third part of it. This is if you like, the end result, the output. And on the original date, I've got those estimated tax and high income child benefit charge figures. But on the new date, I've got these figures, and here's the difference. And now I can see that if I were to change to 31st of March 20, then I actually increase the 1920 liability by 6,200, reduce this year's liability by 11,000, etc. Whereas if I reset to the optimal date, which was March 21, then I can see that I don't have that increase in 1920, but I save over 5,000, just over 5,000 in 2021. So the suggestion for this client, it's obviously going to be totally different. For some clients, it'll be don't change at all. But the suggestion for this client is go for the optimal of 31st of March 21 and not for any of the others that I'd selected. So there's a huge flexibility in this. You can put in whatever accounting date you like, whatever profits you like, and whatever grants you like, and the recognition date you can change. Put in, oh, I didn't mention other income. It may be that the taxpayer has got 5,000 a year of other income. So we put that in, and that'll change the tax figures. Or I should put 500 in there, it doesn't matter. You can at any point reset all to 0. Are you sure you want to do that? Yes. And it will then default to 0 profits. It defaults to a 31st of March year end, and it defaults here to a 1st April recognition date for the local authority grants. And the final thing I can show you, because I know this has caused some users some question marks, let me put in a very large figure there. 1 million. You saw briefly some hashes, and there are lots of hashes over there. Now, this is a weakness, I think, in Excel, and I've spent a lot of time on this, but the columns are too narrow for all those figures. That button there, auto fit, when I press that, excuse me, it automatically widens the column so that you can see everything. So if you get hashes, just click auto fit. Have I shown you everything? I think I have. And I hope that will be useful. It's clear that there will be many sole traders and partners whose immediate tax cash flows can be reduced, and of course cash flow is everything at the moment, by an appropriate change of accounting date.